So 2023 was my best trading year so far, and I only traded 2 setups this entire year to make it my greatest year so far. So we're going to be going over both of those setups, and today we're only going to review one of the setups because I want to make a video dedicated to each one. But today we'll take a very in-depth look at the strategy that I used, and then we'll take another look at the second one in a different video. So let's get right into the video. So there's not much to really explain about the strategy itself if you guys are familiar with supply and demand or order blocks. So it's fairly simple. There isn't really anything that I want to say is complicated about it. It's very simple if you guys follow me and you guys know the supply and demand videos, right? So whatever you want to call it, order block, supply and demand, they function the exact same way. Okay, and the setup that I traded this entire year will look something like this. So first we need to identify an order block, right? Right here we can see one because what we have is a strong drop to the downside on this candle, right? So what happens is I'm going to mark down the candle before that big drop happens. Okay, so now I'm going to mark out the high and the low of the candle before that drop happens, and I'm going to draw a box around that. Okay, now what I want is for price to return back into this actual zone itself, right? And the reason why order blocks or supply and demand works is because an area where the price moves too fast, we know that sellers or buyers, if it's a demand zone, are going to be waiting for a return to that range, right? Price moved way too fast for them to enter on the first drop, so they want to wait for price to return so they can re-enter. Okay? It's a fairly simple concept. There isn't really anything interesting about it. Just understand that there's a lot of sellers piled into this range. Okay? So what happens here is I look for a reaction to the zone of some sort, right? I don't just enter off of every single demand zone or supply zone. I need some sort of reaction for me to actually take the trade. Okay, so in this situation what I can see is right off the bat we have a wick. Okay, so not this first candle, there isn't a wick. The second candle, there really isn't a wick. This third one has a strong rejection. Okay, so it wicks and we close red with a very bearish candle. Okay, so in this situation this is a great sign that I can enter this trade. Okay, in this situation we enter, and what happens is I place my stop loss right above the zone. I personally prefer, if you're trading SPY or QQQ or any of those indexes, you want to go with about 10 to 20 cents above the actual zone itself for your stop loss. Okay, but as a rule of thumb, you just want to go right above the zone. You don't want to go too far and you don't want to go too close. Okay, so you want to just place it a little bit above the zone itself. This is just so you don't get faked out or anything like that, but this stop loss is a little bit just also depending on your own risk parameters and what you trade with. Okay, so the profit target I place at the previous low. Okay, so the most recent low in this case you can see was right here at 15,230 on QQQ, or not QQQ, NQ, same thing. So 330 on that, and you can see that I have my target placed. Okay, the trade is going to look something like this. Now what I do is, this is totally up to your preference, okay, but before it even hits the target you can scale out of your position, right? So you can exit partially before it even hits that target, or you can hold the entire trade until it either hits your stop loss or profit target. That is totally up to you on your own preference. Just figure out what you like more. Okay, in this situation, let's say we got this drop right here. You can exit some if you want partially. If you don't want to, you just wait it out until the trade comes down to this low right here, which is over the next day, and you can see that this is a much longer trade. Obviously it's not going to take 2 seconds for that trade to hit the target because it's a much wider profit, but you can see that from that first bounce we hit the target pretty much, I want to say, a few hours later. Okay, now second zone again. Okay, we got a second test of this zone right here, and this one we didn't get a wick of any sort, right? But what happens is that price rejects the zone right here. Okay, so what happens is we move out of the zone to the downside. So my entry would be right on this exit of that zone. Okay, my trade would look something like this if I entered off the second one. So stop loss goes above the zone, target goes at the recent low, and trade hits the target right here. Okay, so fairly simple. Now third test of that zone right here, same thing. We get a wick, very strong rejection. I take my trade, looks something like this. Stop loss goes, oops, wrong one. Stop loss goes right here above the zone. Okay, profit target goes at the recent low, in this case is right here. Okay, and trade hits the target right here. Okay, so that right there was 3 setups that you could have taken, 4 setups that you could have taken off of this single zone. 1, 2 if you want to trade that one, 3 and 4. Okay, and each of them worked out. So that is one that we traded for about 2 or 3 days straight, and it was a perfect version of these order blocks that works out in real time, right? So let's take a look at another version of these order blocks. So where do we go? So here, right here, you can see we have an order block right here where is a strong drop. Okay, and we're gonna mark down the high and low of the candle before that drop happened. Same thing. Okay, you look for a strong drop or a strong move up if you're playing calls or to the bullish side, and in this situation just mark out the high and the low of the candle. Okay, very simple. Now what happens is I need some sort of confirmation that price is reacting to this zone right here. Price wicks. This is a great sign for me. This shows that sellers are stepping into this range, and this is something that sellers are looking to pile in on. Okay, so I take my entry once I see the wicking. Stop loss goes right above the zone. Profit target goes at the most recent low. Okay, and you can see price rejects. We come down and hit it right here. Okay, now if you miss that initial entry, okay, there is a second test right here, but that one's not the strongest one because we barely hit the zone, so that's not something that I would personally recommend trading. But we get a third one right here which hits perfectly. Place your target at the previous low, which in this case is now here. Okay, stop loss goes above the zone, so in this situation we're going to place our stop loss above the zone. Profit target goes at the recent low, and we hit our target right here on this candle right here. So you can see the beauty of this setup is the fact that there isn't a lot of risk for how much you're getting a reward, right? So each of these trades is about 2 to 4 risk to reward ratio, sometimes a little bit less, sometimes a little bit more, but on average you're not risking much for what your reward is. Okay, so those are perfect examples of one that worked, right? So I do want to take a look at some examples of ones that didn't work out and why they didn't work out, so you can kind of get a better example, right? Because you're not going to be trading every single order block that there is. Okay, you're going to be only taking ones that are high quality. Okay, so let's get rid of these on the chart so you guys can get a better look. Okay, so if we take a look at, oops, I lost it, where'd it go? So if we take a look at this one right here, we can see that I lost them completely. Oh, here we are. So you can see that this one right here is still an order block, right? We have the move up and we have the candle right before that, right? We had a trend reversal and the move went up. So why does price just knife right through it? Okay, and why wouldn't we take this order block compared to the other ones that we were trading? So in this situation, what happens is that first off, the candle here is not really that strong, right? Compared to this one where you can see the candle was a massive red one, right? This one was pretty small. There wasn't really much going on there. So that's the first thing. You want to make sure that the candle that rejects is pretty strong, okay? If we look back up right here, you can see this candle was a massive red rejection. So this would be a good order block for us to take in the future, right here, okay? So that's the first thing. Second thing, there needs to be some sort of confirmation. In this case, we just get a straight knife through. There's no wick, there's no indication that buyers are stepping into this trade. Okay? It's just a straight red. Alright, so we understand that. You need some sort of indication, whether it's wicking or a candle close that's a strong candle close, right? You need something to show you that there is buyers or sellers stepping into that situation. Okay? Now let's take a look at if there's any on this chart right here. We can see, I'm not seeing many good ones so far, but here's one that didn't work out, okay? And we'll explain why that didn't work out. Here you can see we have a strong rejection once again, right? And we have that big candle. So mark down the high and the low, and now we just wait for price to return back to this range. Okay, we got the wick. We got everything in this situation is really good. There isn't really anything wrong with this order block, right? But no strategy is 100% and you will end up taking losses on some of the trades. Now the beauty of this trade is that if we do take this, right, our stop loss is just going to be right above the zone. Profit target was going to be at the most recent low, right? And even though later it does go and hit that, it doesn't matter. What matters is that we are taking much smaller losses compared to if we were trading any different strategy, right? We just move on and go on to the next trade. So we're not really taking anything where, you know, we could take 4 losses in a row of order blocks and our 5th one can cover the profit on that, or the losses on that trade. Okay, so I traded this setup pretty much. I want to say half of the trades I took last year were using this setup, maybe a little bit less than half, but this is just one of those setups that I used, and I'm going to be going over the second setup in the next video. Okay, so that's going to be a great, to be honest, the second setup is probably my more favorite one than this one, but this is one that got us a lot of good trades and a lot of big wins recently and towards the end of the year as well. So, and I really hope you guys enjoyed it, and I hope you guys got some insight into what my strategy looks like, and hopefully you guys can apply this to your own strategy as well, so your own trades. So that would be great if you guys are able to find this useful. If you guys have any questions, just leave it down below in the comments or DM me on Instagram, anywhere you want. And yeah, I really hope you guys are able to add this to your own strategy. So I'll see you guys in the next video. If you guys have anything you want to see a video on or any content ideas, just leave them down below and I'll make sure to get those videos out to you guys soon.